Well, Bitcoin made history with its seventh consecutive green monthly candle, but that is really just the beginning of the story. And quite frankly, things are not always as they seem. Good morning, guys. It's Keith Allen. Hope everybody had a fantastic Easter holiday weekend and is focused on what we have ahead. As you can see, we did, of course, score this seventh green candle, and now we have a red candle developing here on the monthly. So let's kind of break this down and see what this really boils down to. First of all, at the beginning and end of every month, I'm always looking for new trend precognition signals on significant time frames, weekly, monthly, especially daily. Of course, I monitor as well. I monitor them all, but these are the more significant ones. These higher time frames tend to have more of a longer term effect, right? More macro, if you will. And we don't have any new signals here on the A2 plus algo. That's the arrows here. However, the A1 is showing us a tentative meaning this is not confirmed yet and won't print until this candle closes. It could invalidate if price moves back up into all-time high territory here. But for now, we do see some downward momentum after what has really just been a remarkable 7 months. Let's drill into this a little bit and see what this looks like as we narrow our time frames a bit. On the weekly, no new signals as well here, and you can see price consolidating into this range. What is important, in my opinion, and I'm going to take it down to the daily now, where you see we do have a red signal on the daily chart. What is, in my opinion, the most important thing in this entire chart on any time frame comes down to one very simple thing. This little tiny wick. We've broken below the long-standing all-time high at 69K. And we've had a hard time. Bitcoin has had a hard time holding this level since it first attempted to break in and has not been able to hold. So let me clear out some of the noise on the chart here. We get the gist of what's going on with trend precognition. But as you can see, through the entire life cycle in this area, Bitcoin has struggled. Okay, this is obviously a historical range because, of course, as we led to the prior all-time high, we had resistance in this 58 to 60K range, broke through, then broke down, had this really was where distribution began. This is really, in my opinion, technically the top of the market. Things broke down. We had a distribution rally back to a new all-time high. And again, this 58 to 60K range was important. And we'd never even revisited this all-time high at 69K until recently, of course, right? So now that we are here in modern times, if you will, you can see that, we're really focused on the same areas that we were focused on back in 2021. And we have our lower low here at, 59.3-ish. And we have our all-time high, our new all-time high around 73.8-ish, depending on what exchange you're on. But each time we've attempted to break up here, right, we rejected, we came back down, had this big dip. This was a big correction that really was a good opportunity if you had the chance to buy it. And of course, price worked its way back up, rejected, broke through, wick down, sign of weakness, full candle above. Oh, things are looking good. New all-time high and breakdown. Further losing the 21-day moving average here. And finally climbed our way back in, broke above that broke above that 69K level, but wick down. Support at the 21-day moving average. Wick down. Still not holding that 69K. Wick down. This one just barely held at $69,073. Then we had another full candle, and now look, we wick down again. So to me, this invalidates the RS flip here at 69K. We've yet to hold it. And, now where is Bitcoin going to consolidate? Before, I do think that, listen, we have a halving coming up. Fundamentally, things are bullish, right? We are going to eventually break up and print a new all-time high. That's pretty well expected here. But where is the consolidation going to happen? Is it going to happen above the 69K level, or is it going to happen here? Or is there going to be a further breakdown that brings us down to this range. At the moment, I think this is not a very high probability at all. We don't see any liquidity in that range at this stage, and really everything is stacked between here and here. And we'll look at that here in a second, but there needs to be some consolidation. I mean, that's really where the strongest moves happen from, as you can see here, right? We consolidated in this range for quite from beginning of December through February, and then we had a nice strong breakout from there. This never ever got retested, and that that sticks in my mind. It may never get retested. However, this level continues to get retested until we see consistent candles above this level and moving into new all-time highs. Then we don't have, in my opinion, a validated resistance support flip. So let's see what this looks like now in terms of order book, because and I'll be honest, I expected to see more volatility over the weekend. We had some thinness here, and then support came in. We had more support here, and then obviously that pumped us up. We had resistance up here, and now look at this. This is a brand new ladder. This appeared here, on the overnight. This appeared after the monthly close, and we now have upwards of 150 million laddered down to 60K. All right, so this tells me that even big money, even institutional money, is not confident that price will hold here, the price will hold here, or here. So they're laddered all the way down. They're going to dollar cost average their way into this position, and that's something I've been talking about for quite some time. Quite honestly, I'm doing exactly the same thing. That's not advice. In fact, nothing I say or share on these streams, as you know, is advice of any way, shape, or form. Just my opinions, my insights, and I share with you, what my strategies are. You got to do what works for you. Just know that there's now significant liquidity in this range. Liquidity dampens volatility, so that will, if we do get a dump from up above, it's going to get absorbed. At least 150 million plus of it is going to get absorbed here, and this is where our local bottom is at the moment. Certainly, these things could change, but we had a nice dip here this morning, and as you can see, things were bought pretty aggressively. What's noteworthy here is, brown mega whales sold from up in this level. They bought here, sold, realized that wasn't going to be a good move, and sold it. And red, which has been super aggressive for the last since Christmas, right? Since ahead of the ETF approval, red was really, really buying strong, and now they seem to be simmering down just a bit. Now, obviously, TradFi was closed on Friday and through the weekend, so there was no buying from any of the ETF-related cohorts during that time. But at the moment, we're seeing less volume out of that order class, and they had been one that was on top of that order class for quite some time. So this obviously can change, and we're watching to see. Tomorrow we'll see what the ETF flow looks like today. Looked like from today. We have, as you can see, we broke through, established some more support here at the 69.5 level, and now price seems to be moving up. Could it move down? Absolutely, it can. And, on that note, some of the liquidity from above has moved down. So we have more pressure, downward pressure coming from above. Some of these asks have come down closer to the active trading range. And, of course, we have this ladder that is moving, all the way down to 62. And then we have support here at 60. And, what was here at 59, a lot of that has disappeared. So this really looks like the sweet spot right now. It would be a great place for price to consolidate, in my opinion. That happening in this range would be fine, right? Whether the 21 holds remains to be seen. If we zoom out, we can see how the moving averages have had an impact. Actually, obviously we have some unwinding of these moving averages, which is important. What's noteworthy here on the monthly is that we have now a golden cross, which is formed after the 21-month moving average has crossed back above, the 50-month, and really, this is the first time in history that Bitcoin has any time below the 50-month. We had a wick down here, on that dump, but since then, this was a flash, right? But we spent quite some time here, several months below that 50-month moving average, and have now climbed back above it. It would be reasonable to retest that level, but at the moment, there's no sentiment for that. There's no liquidity down in that range, so I don't think that's likely. What's more likely here is to have some consolidation right up here, and whether that consolidation happens above the 2021 top at 69K or whether it drops back into this range remains to be seen. Apparently, this entity right here believes that it's going to be below that 69K level and in this range, and that would be reasonable because it never really got tested much, right? The 44, 45K range never got tested at all. We never had a retest down here. I'd love to see it. Just don't think I'm going to get it at this point. We did have one retest here coming, after we nosed into the all-time high territory, made just squeaked out a new all-time high here above 69K and dumped down, right? And so reasonable to think that we'll see more consolidation in this range as we have here. We've had a little bit. So, maybe this 21-day moving average holds at the 68.5 level. If not, then I would look to this 50-day moving average at the 62.5 level. Of course, the really, really important thing to protect here would be the lower low. If we see a lower low, then we have a whole different analysis that we need to that we'll need to consider at that point. But this is really what I'm looking at the moment. Let's briefly look over at ETH and see if we have any clues there. Since it's a brand new month, let me turn this on and see if we have any new signals on ETH. As you can see, ETH, if we widen out, also had 7 consecutive green candles. Not the first time in history for ETH, by the way. That happened back here. Look at this. Back in 2020, on its way to an all-time high. 1, 2, 3, 4, 5, 6, 7 green candles before it hit all-time high ranges. And then, the rest is history here. So where we sit now, obviously, price had cleared the golden pocket, had a rejection from the 786, and now trying to consolidate above this 618 and go back and create a new all-time high. Let's see if that happens. So should we get more pullback from ETH, I would look to, areas of prior support. As you can see, we have a nice range here at just above 30. Let's call it 3330, where we have some, that's the 786 essentially, and a prior local top. So there's some confluence there. I like that range as a potential support level. Should we get it, you can see some pretty strong resistance here at this confluence, right, between where the all-time high was and the highs that followed, somewhere around 3650-ish. So in a tight range for ETH at the moment. Take it down to the daily. So potentially, as you can see, we lost the 21-day moving average here back in mid-March and trying to reclaim it. Reclaimed it yesterday. Look, failed attempt. Reclaimed it yesterday. Now fell back into the range. So on these attempts, the 50-day has held with one quick wick below, but the 50-day has held. So reasonable to think that we could potentially see a test down here in the that's 3390, 3400 level, and that's kind of straddled between this 33.3. So you could see something in this range right here as a potential retest if we can't hold up above that 21. So that's what I'm looking at in terms of ETH. But my focus, as you know, is always on Bitcoin, and I am anxiously awaiting this move. Right, we know the upside is coming. Right, the halving is now less than 3 weeks away, and so it's reasonable to expect price to move upward after the halving, but it's also reasonable to expect corrections to come from any time. So whether that correction comes from here or from here or from here remains to be seen, right? But if you think that we can't have a correction of any way, shape, or form just because there's a halving, then you're kidding yourself. Don't be the April Fool, right? Because we have a history, and I've shown you that, and I'm going to show you again in case you're new to the stream. I'm going to show you very quickly that we do have quite a bit of history of corrections, even right before and right after halvings. So do not think for a second that this cannot happen. It has happened. It can, it will, and it will again. Plenty of history of 20 to 40% corrections happening in bull markets, sometimes just before, sometimes just after the halving. It's something you need to be prepared for. And I don't say that because I'm a bear. I don't say that because I'm trying to push a bearish agenda. I'm neutral, right? I'm probably the most neutral guy you'll find on this platform. I say this because I want to make sure that I am holding dry powder for the opportunity to buy more should we get one of these larger dips. Simple as that. All right? It's naive to think it can't happen because the halving is right here, and it's naive to think it can't happen after the halving, and here is all evidence of that. Just know that it can happen. So whether that correction happens here, and let's see what it looks like. Let's say that we're only going to get a 20% correction, okay? 20% would bring us right here to where we see this lower low. It would bring us right to where liquidity is concentrated in this 60K range. We may never get it because we have, over 150 million stacked right here to absorb. So we may never go there. We may have already seen our biggest dip, but it stands to reason that it could still happen. And hey, what if it happens from up here? What if it happens from let's go to the 80K range, right? Because that's thought to be the next kind of level of resistance. That's kind of where the halving is, right? So if we were to stay on trend and make our way up to this trend line, let's say it's at the 80K mark, right? So if it came from the 80K mark, so that moves, where 20% comes from, and 30% comes from, and 40% come from. So just know that we've got to stay in tune to this target, and until price starts printing full candles above here and starts stacking above here to go after this lifetime channel, then we're still in a situation where we cannot bank on the astronomical numbers that a lot of people are forecasting. I think that once we, if we consolidate in this range or consolidate wherever we consolidate from, once we break above our new all-time high, which is around 73.8, we now have to work on this level here, right? And this is always moving. This is a moving target. Every day it gets higher and higher and higher to get into what I think will be real price discovery. This is the lifetime channel. I've shown it to you on wider views. This is, lines are subjective. This is how I draw them. This is my lifetime channel on Bitcoin. It's reasonable to think that maybe we won't ever even make it back in, and we're still making money along the way, right? This is like what, 140,000. But if we do, in my opinion, this is where real price discovery can happen, because we have nothing structural here until we get to the midline, 350,000, or till we get to the top, which is in multi-million dollar, this is just not reasonable to forecast, in my opinion, anything up here at this range. We just have to see how things develop. But, my goal right now is to manage my capital, make sure that I have some dry powder available for opportunities as they present themselves, and to make calculated decisions, right? So it's April 1st. Don't be the April Fool, right? Stop speculating. Start making smart decisions. You can be the smart money. You don't have to be a millionaire to be the smart money, right? Making smart decisions is what makes you the smart money. And then, maybe you become the financial trading guru that you hope to be. But it starts with making smart decisions. And that's what I'm here for. I'm here to help us all hopefully make more informed decisions. So bring that with you as you move into the month, knowing that we have a halving coming up, and that price should appreciate from here. If you're an investor, not a trader, you're probably in pretty good shape, and it's very hard to beat buy and hold at this point. If you're a trader and you're looking for opportunities, you got to be patient. You got to be patient, and we're not always going to be right, but we try to be right more than we're wrong, and that's how you win the game, and you manage your risk and manage your capital so you can stay in the game for the long haul. That's how it's played. Hope that helps you out, guys. I'm going to give you one more quick view of fire charts so you can get some perspective here. As you can see, we've got over 150 million laddered down to that 60K range. We have heavy resistance overhead, and we need to start breaking these levels to really get back into price discovery mode. But be very nice to get an opportunity to buy lower. Let's drill down to see if there's any other clues that we can play off of. And one of them is, as you can see, that price. Some of the ask liquidity from above is lower down into the range. So these guys are now dropping their asks down lower, meaning they don't think the price is going to come up, and they're actually going to make sure that price doesn't come up higher. You know why? They may not ever even want to get filled here, but they would like to get filled down here. So maybe that's the game that's being played here. And one more look at the daily view, just in terms of what we're seeing at the moment. We do see aggressive buying out of most classes since the dip this morning. However, nothing from brown mega whales, who are the ones who created this dip, and nothing from this red class of sharks, who has been so aggressive through the last several months since Christmas time, doing all that heavy buying here. That's the long and short of it, my friends. Hope that helps you out. Hopes that make some smarter decisions here as we head into the halving in the month of April. If you like the analysis, man, do me a favor. Please smash all the buttons and share this thing and share those comments. I love your comments, and I engage with each and every one of them, and I will continue to do that. You guys really make me feel good. I appreciate the support that you guys are showing me, and keep it up. Help me grow these channels. That is greatly, greatly appreciated. It is April 1st. Don't be the April Fool. Time to become the smart money. Have a great day. Have a great week. And let's make it a profitable month here. Have a good one, guys. We'll talk to you soon.